I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show. It is July 28th, Thursday.
And this is the interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. We do this Monday through Friday. And remember, this is for informational purposes only. This is not financial advice.
That's right, folks. We are very smart, but we are not financial planners.
That's right. 30-year fix today. And we're going to get into the Fed rate yesterday. So we will talk about that. But we want to show people.
We're going to save that.
Yeah, we're going to save that. Okay, so the Fed spoke yesterday. What happened with interest rates? I thought he raised the interest rates 0.75%. Well, look, the interest rates, all of them, went down a little bit. We have the 30-year fix at 4.875, the 15-year fix conventional at 4.125.
You have the 30-year FHA 4.375 and the 30-year VA 4.375.
All these quotes, they have no extra points. There's no extra fees to buy, to get those rates based off of these assumptions for conventional FHA and VA. Everyone's scenario is different, but if you have a situation or scenario like this, these rates that we show you right here should have no points, no extra fees. And
that's right, yeah. Yep. Nothing hidden.
So yesterday's Fed rate news. The Fed increased the rate by 75 basis points. Also, that's known as 0.75%. And that is exactly what the market was expecting and hoping for.
Right, yeah. We actually saw that chart yesterday where 25% thought that it was going to be, 100 basis points, and 75%, thought it was going to be 0.75. So there was still that little bit of that 25% delta. Which way was it going to go?
Yes. So you maybe you were driving in your car, or you're listening to the news and you hear the Fed raised rates. Again, so that was already expected. They were really expecting that. And as a result, since it wasn't a higher rate than they were expecting, the stock markets rallied. The NASDAQ went up like 4.25%, a couple percent for the S&P 500. And so the whole, all of Wall Street was relieved.
I think it's a juggernaut. Maybe that's the right word. It really is like mind-blowing. Like, how can the Feds raise interest rates 0.75%, yet the mortgage goes down? We've always talked about it. There is correlation, but it's not direct correlation, and they're forecasting. They are pushing. So the bond already kind of knew what the Feds were going to do, and since it wasn't as much as they could have done, they actually got better.
They did.
So hopefully that kind of makes sense. And this is a perfect example of how confusing this can be. But there is sense in this seemingly nonsensical situation we're in.
Yeah. So the Fed is going to be meeting next. They don't meet every month.
Right, they meet
sometimes
what, 8
they meet monthly, and then and then there's a break for a couple. So there's no meeting in August. So the next meeting is like September 20th or something like that. So it's 2 months. It is a long time, especially when you're in an election cycle, where we have the midterms coming up in November. I mean, it's like forever.
Yeah.
Waiting 2 months.
Someone said, since the Feds aren't speaking, does that mean nothing's going to happen in market? And we said, no. The Feds speak after they kind of hear what the market is doing. So it's the market. This market's not going to be slowing down. It doesn't take a nap. It doesn't go on vacation. The market, which is you and I, are still moving. The Feds are reacting to that market.
And we're right in the middle of earnings seasons. And what that means is like a lot of the public companies right now are releasing their earnings, how profitable they have been. Like Walmart just said, hey, we're going to have a bad year this year. But that happened a couple days ago. I mean, like when the big S&P 500 companies are releasing data, the market's going to respond.
Right, the market is going to respond.
So the big companies are not profitable.
Remember, the Fed is not the market. The market is the market, and the Fed reacts to the market to try and keep it as stable as possible.
The big takeaway from yesterday's speech, I think, the biggest for me, was that Jerome Powell said it may be appropriate to slow the rate of increases. That was huge. So the idea that we're going to have them increase the interest rates 0.75% or 1%, I think that's totally off the table.
Yeah.
I think that's me. I'm not. I've read a lot about it since yesterday, and I really agree with that. I don't think.
Yeah.
Meaning, I don't think when Jerome Powell says that, I don't think we're going to ever see a 0.75% raise anytime soon. Maybe we'll see a quarter. Maybe
Okay.
so a half.
Yeah. Well, so huge. The word may
Yeah.
and slow. Those are the two big, words there. And again, you may be like, why do you, relying on those words so much? The words are chosen very specifically.
Yeah.
They probably spend hours on which words to use.
Yeah.
Literally.
All right. So something we didn't even say in the intro of this, but the GDP came out this morning, the second quarter GDP. And it's huge news. I mean, this is absolutely huge. We didn't talk about it. I wish, but we're doing it now, right now. The first quarter was a negative 1 point. So the first quarter, which ended, March 30th, was a negative 1.6 growth. Today was released that the second quarter was 0.9.
0.9. Negative.
It shrank by 0.9. So it was a negative number, which means technically we're in recession.
Right, but they actually thought that number was going to be bigger.
Yeah, they thought it was going to be 1.6.
They thought it was going to be 1.6, so it's actually better than what they, anticipated, which again is good news. That's part of the juggernaut. Like, how can negative news be positive? Well, because it's not as negative as they thought.
Yeah, and it's kind of weird because this is the GDP is released today, which it was, and then it will be revised they're going to crunch more numbers and revise it like August 25th and tell us whether or not they were whatever that number is revised to.
Yeah, imagine how many numbers you have to crunch in order to make sure that your numbers are correct.
Yeah, but we really are, based off of the technical definition of a recession, we are in recession as of July 1st.
Yeah, and I wanted to speak to that. So, again, technically, we may be in a recession. There's a lot of publications out there that aren't saying we're in a recession. So again, we're not financial advisors. We're simply, putting data up on the screen, and you guys can figure out what exactly it means to you. But from a technical standpoint, we have those 2 quarters of negative GDP.
Yeah, and you will also notice, depending on what news media that you're watching, which ones are saying we're in recession and which ones are not.
Right.
And you can guess. But, it's a political world right now where nothing makes a lot of sense, but we do know, based off of the old rules, we're in recession. So we're going to continue to watch interest rates. And again, we could see interest rates as a result of this move, of all this data, actually go down in the next couple of months.
Yeah.
Maybe, I don't think we're going to see upward pressure.
Right. And remember, recession doesn't mean loss of home value. Okay, a lot of people coming from the 2008, 2009 era are like totally, maybe freaked out. But every recession can be different. So just because we're in that R word doesn't mean that your home value is going to go down. If interest rates continue to come down, the inventory stays low, and you need to get in a home, that's what you got to do. You got to get in a home. I spoke to a borrower, like, should we wait? I said, well, how long are you going to wait for? Like, literally, you just can't wait for eternity. So don't be afraid of the market. You live in the market. We all do. We need to each wake up and keep moving.
So let's see where rates are tomorrow. Stay with us. Be sure to subscribe, comment, and like. We'll be back.
All right. Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com. And be sure to take a look at all of our other videos on our channel.